Years. So, our stocks oversold. Well, joining us is Randy Bateman, Huntington Funds President and Chief Investment Officer, and Harry Rady, Rady Asset Management CEO and Portfolio Manager. Gentlemen, thank you very much for joining us today. Randy, let me start with you. I love what you say in your report where you say over the past month, Goldilocks ran into the three Gs. You had Goldman, the Gulf, and then Greece, and the market, of course, has priced in these risks. So my question to you, has it overreacted to these risks?
You know, what we need is more individual investors to kind of smooth this market out. Unfortunately, we are in what I call a spider market. The average investor keeps waiting for the next shoe to drop. Unfortunately, we got a bunch of spiders that are out there, and there's a lot more shoes than anybody expects. And it's been these exogenous events that really have had an impact on the market and pushed the investor to the sidelines. It's been played now by institutions, and that's very, very tough on the VIX.
You know, I think you're absolutely right. I don't think anybody really anticipated all of that we've seen really coming out of Europe. Let me ask you, Harry, if the job market recovers significantly in the tune of 500,000 plus jobs, as Steve Leeson just mentioned on the more optimistic side, is that enough to offset potential problems from Europe?
You know, we look at volatility as an opportunity, and we see extraordinary opportunity in a few sectors. And the sector that we see the most opportunity in is natural gas-focused exploration and production companies. These stocks are trading at decade-low valuations. We think that a number of these stocks have 200 to 300% upside.
Which ones in particular, Harry?
Well, probably the most interesting one would be Cobalt Energy. It's got a position in the Gulf of Mexico, but they've got a pristine balance sheet, and the stock is trading at less than 50% of liquidation value. So if you can stomach the volatility of the news in the Gulf, this is a very interesting play.
And Harry, is this going to somehow insulate you from what's going on in Europe?
You know, I think, you can look at natural gas, obviously, as a commodity. So if you believe that commodities can insulate you from volatility, then the answer is yes. And we believe that to a certain extent. But as a long-term value investor, we're willing to stomach the short-term volatility in exchange for long-term alpha. And that's what we think we're getting with natural gas.
Randy, what are you doing in terms of positioning yourself for June?
Okay. We're pretty positive on the overall economy and the market for the short term. Obviously, we are in a cyclical recovery. We like those industrial names, those energy names that will propel us forward. But long term, we're very concerned about the consumer. Over the past few decades, the consumer's been remarkably resilient. In the 70s, they created the dual household income. In the 80s, it was multiple credit cards. In the 90s, it was home equity mortgages. In 2000, we found out you didn't even need to put money down on a house to continue your spending. We think the consumer's tapped out, so we're very concerned about that.
Tapped
but there may
out
be
enough to maybe cause a double dip? Is there potential for a double dip? You know, you've got the external factors, and you've got a weak consumer right here at home. Is there enough for a double dip?
The consumer represents 70% of our economy, and he's going to be weaker this cycle.
However,
but the Chinese and the
let me interrupt you real quick, because I want to know about jobs. I mean, we're seeing some signs of strength returning to the job market. Isn't that going to be enough to really help prop the consumer up? If they're already feeling optimistic, and now they can be even more optimistic because there's a light at the end of the tunnel in terms of jobs, what does that mean?
Some of the jobs are starting to transpire, but in reality, if you look at small business, they're still not hiring. They're very apprehensive of a lot of the programs that are coming out from a regulatory standpoint and the costs associated with that, the unemployment costs, the FICA costs, and those other factors that are going to be a little bit more long-term in nature.
So if you're that worried about the consumer, what is your play right now? I mean, do you stay away from consumer discretionary, for example?
Absolutely. Yeah, we like the more industrial play. We like the cyclicals that are going to rebound with this economic rebound, and we like companies like Trinity Industries, and we like Enpro. Not too terribly fancy names or fancy products, but they're certainly there for the infrastructure build and certainly will propel us forward.
Randy, what kind of indicators do you think we should be watching to see whether or not we're back on the road to recovery or whether we're up for another bumpy ride? I mean, like, should we be watching gold, which, of course, is back above, 12.25? Should we be watching the euro, which has become a proxy for risk? What do you think is going to tell us whether or not we're going to continue with a rally, or do you think we're going to go back down?
I think you just need to keep looking at the GDP numbers, those factors that are out there that are going to be notified by the continuing strength in the economy, those statistics will be out there. It's nothing that's going to be one magic bullet, unfortunately. It's going to be a variety of things that are going to tell you the true story.
I think it's important for investors to pay attention to valuations. You can focus on all sorts of indicators, but if it's already discounted in the price of the stock, then there's no opportunity. And so I would argue that in the context of consumer discretionary, I agree with your other guest, and a number of these stocks are significantly overvalued, which creates opportunity on the short side.
Thank you very much for joining us, guys.
Thank you.
When we come back, with stocks in a slump, where else can you invest your